The Subcommittee on Housing and Insurance will come to order. Without objection, this chair is authorized to declare a recess of the committee at any time. This hearing is titled The Reauthorization of the Terrorism Risk Insurance Act of 2002. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. At this time, I'd like to recognize myself for 4 minutes for an opening statement. I'd like to, first of all, thank all of our witnesses for being with us today, and I very much look forward to hearing your testimony on the Terrorism Risk Insurance Program. This program was created in the aftermath of tragedy. After the events of September 11th, 2001, the risk of terrorism suddenly became an all-too-real situation for many Americans. On that terrible day, the unthinkable happened, and the world forever changed. After the terrorist attacks of September 11th, terrorism risk, which was previously something that had been incorporated directly into the underwriting of commercial property and casualty insurance, seemed like a risk far too remote and difficult to quantify and underwrite. As a result, the federal government stepped in with what was initially proposed as a temporary federal reinsurance program. The Terrorism Risk Insurance Program was created in November of 2002, and it has since been reauthorized 4 times in 2005, 2007, 2015, and again in 2019. The next expiration of Terrorism Risk Program is at the end of 2027. That may seem distant, but the reality is that terrorism risk contracts typically extend for 1 year. As we approach 2026, it makes sense to begin conversations on what a TRIA reauthorization should look like. And for members of the subcommittee, this hearing is a first step in the reauthorization process and an opportunity to learn more about the Terrorism Risk Insurance Program. We need to know how the program has changed over time, what the program does well, where it can be improved, as we begin considering reauthorization. I have 2 priorities on this issue. Number 1 is to work quickly to provide the certainty required for insurers and insureds to continue providing terrorism risk insurance and at a reasonable cost. And 2, to ensure that we work to mitigate taxpayers' exposure to this program. Since the Terrorism Risk Program was created in 2002, we have been fortunate, knock on wood. There has never been a certified act of terrorism by the Department of Treasury, nor has there been events that would have reached the Terrorism Risk Insurance Program's financial trigger. We, of course, hope that no future events ever occur that would trigger that. However, TRIA's value is not just in direct responses to terrorism events. The program makes it easier to have an operating market where entities can purchase insurance that covers terrorism risk, and a well-functioning insurance market makes it possible for all entities and entities of all kinds to purchase insurance against terrorism risks. The Terrorism Risk Insurance Program helps our economy bounce back in the event of attack, and it provides market stability and peace of mind in the interim. So I look forward to hearing from our expert panel today. And we are going to talk terrorism risk insurance all morning, and with that, I yield back. I now recognize the ranking member of the subcommittee, Mr. Cleaver, for 4 minutes for an opening statement.
Thank you, Mr. Chairman, for holding this important hearing on the reauthorization of the Terrorism Risk Insurance Program, also known as TRIA. I will, for the rest of my life, remember where I was at the very moment that the report came through on what happened in New York. I was watching Katie Couric, who's no longer a TV reporter, saying, something seems to have flown into a building here in New York. The terrorist attack on September 11th, 2001 devastated U.S. citizens, households, and businesses. As a direct result of the unforeseen and unexpected level of covered losses, insurers began to explicitly exclude terrorism coverage in commercial property casualty insurance policies. Additionally, due to state laws prohibiting the exclusion of individual risk elements from workers' compensation insurance, the potential for enormous liability created a crisis that impacted employers across the nation. In response, Congress passed and the President signed TRIA into law to stabilize the market for terrorism risk insurance. Since that time, Congress has been able to come together and reauthorize the program 4 more times, most recently in 2019. Many members were not on the committee during those authorizations, and I hope this hearing is educational on the value and elements of the program. The threat of a terrorist attack on the homeland has not subsided. According to the 2025 Annual Threat Assessment from the Office of the Director of National Intelligence, he writes, and I quote, "A diverse set of foreign actors are targeting the U.S. health and safety, critical infrastructure, industries, wealth, and government." The Department of Homeland Security Office of Intelligence and Analysis 2025 Homeland Threat Assessment states, foreign terrorist organizations, FTOs, and their supporters will maintain their enduring intent to conduct or inspire attacks here in the homeland, unquote. The threat of terrorism impacts the entire nation, including my home district in the Midwest. And I'm glad that Congress has been able to historically work in a bipartisan way on this program. Last Friday, I sat down with the insurance industry, many of which, or some of whom, are testifying here today, to discuss priorities for TRIA reauthorization. I heard unanimous agreement on the need for early and long-term reauthorization. What I did not hear was any questions about the value of the program. As the Treasury has affirmed, TRIA is effective in making terrorism risk insurance available and affordable in the insurance marketplace. I also heard that the uncertainty surrounding the program has begun to restrict access to coverage for 2008 and beyond. Early action well before the 2027 sunset of TRIA must be taken to avoid market uncertainty. Thank you, Mr. Chairman, and I look forward to working with you and Chairman Hill and Ranking Member Waters on this effort. I yield back.
Thank you, Mr. Cleaver. We now recognize the Chairman of the full Financial Services Committee, Mr. Hill from Arkansas, for 1 minute for an opening statement.
Thank you, Chairman Flood. Today we will discuss the functions of the Terrorism Risk Insurance Act of 2002, or TRIA, and hear from industry professionals on the current operations and the future ideas for the program. Thank you for sharing your expertise with us today. And Congress is often criticized for not always being out in front on a topic. Here we are. TRIA expires in 2027, and I appreciate Chairman Flood and Ranking Member Cleaver stepping out. Let's get out in front of this. Let's think it through very carefully and get the reauthorization completed before the expiration. The program has certainly helped foster stability in the face of uncertainty, allowing our economy to grow while safeguarding citizens from that existential risk posed by potential terrorist attack. I thank Mr. Flood for his work on this. I look forward to the discussion of the committee, and I yield back.
Thank you, Mr. Chairman. Today we welcome the testimony of Mr. Baird Webel, a specialist in financial economics at the Congressional Research Service, Mrs. Elizabeth Heck, Chairman, President, and CEO of the Greater New York Insurance Companies, here on behalf of the National Association of Mutual Insurance Companies, Ms. Michelle Sartain, President of Marsh US and Canada, Mr. Jason Schupp, founder and managing member of Centers of Better Insurance, LLC, and Mr. Andrew Mays, Commissioner of the Connecticut Insurance Department, here on behalf of the National Association of Insurance Commissioners. We thank each of you for taking the time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statements will be made part of the record. Mr. Webel, you are now recognized for 5 minutes for your oral remarks.
Thank you, Mr. Chairman and Ranking Member and members of the subcommittee for having me here to testify today. As the chairman said, my name is Baird Webel. I'm at the Congressional Research Service. And before I go deep into my testimony, especially for people who are listening, I'd just like to make clear who CRS is. We're a division of the Library of Congress. We provide nonpartisan, objective research and analysis, and we do not take positions on legislation or policy proposals before Congress. I've been in this role at CRS, covering non-health insurance issues since 2003. So I've been a participant in some way in all of the TRIA reauthorizations to this point. And I'd just like to give the committee a little bit of a background and an overview on the reauthorizations in the past and what the program does at this point. So TRIA is a reinsurance program. Approximately $60 billion in damages in the 9/11 attack shocked both the primary and reinsurance industries, which pulled back. The Congress at the time decided to create a temporary 3-year program that stood in the background of the insurance system. So unlike, say, the National Flood Insurance Program, this does not provide terrorism insurance directly to commercial businesses that might be seeking it. It sits in the background where the regular commercial insurers are required to offer the terrorism insurance. Policyholders are not necessarily required to purchase it. In the event of a terrorist attack, the federal government would step in to share losses after the fact. This system has a lot of advantages, particularly in the sense that it's kept the administration of the TRIA program pretty lean over the years. Other than the handful of people at Treasury that act to administer it, there have been no particular outlays in the program because you haven't, thank God, had a terrorist attack that met the thresholds. And so what are these thresholds in the program? There is a program trigger that's currently set at $200 million in aggregate annual losses. So until we had $200 million in terrorism losses in a year, money would not flow out of the Treasury to cover the losses. There is a 20% individual insurer deductible based on each insurer's earned premiums from the year before. So each of the insurers would have to cover this 20% amount of losses, again, before they would receive any assistance from the Treasury. And there is essentially an 80-20 copay. So as losses go up above those thresholds, the Treasury covers 80%, but the private insurers continue to cover 20% of the losses. Through the life of the program, those thresholds have all been adjusted and been adjusted in ways to increase the private sector's participation in terrorism risk. So even though at the beginning it was thought that the 3-year program would be enough to eventually let the program go away and have the private sector cover all of the risk, the conclusion over the years has been that this isn't going to happen. But we have increased the private sector participation in other ways than saying, okay, private sector, you're now taking all of the risk. A couple of other thresholds that are in the law that have not been adjusted over time. There is a $5 million single event certification threshold. So before Treasury can certify that an event is an act of terrorism, it must result in $5 million in losses. And I know there's been a little bit of industry question and confusion over this figure and exactly how the certification process might take place. And there's also on the other end of the program, there's a $100 billion threshold such that above $100 billion, there is no federal coverage and the private sector is not required to cover an event of that size. And as I said, both of those thresholds have stayed the same since 2002. The final aspect of the program, which is a little unusual, especially for an insurance situation where normally people pay premiums upfront, is instead of upfront premiums, you have an after the event recoupment provisions. So that in the years following a terrorist attack, again, there are various thresholds in exactly how this would work, but you would have recoupment of the federal share of the losses, and this is a broad-based measure that would basically apply to pretty much the entire commercial property casualty industry after the fact. Over the years, there's been sort of, I would say, 3 different levels of questions about the reauthorizations. The first is, do we need this program at all? Do we reauthorize this, or do we let it go back to the private sector? The second question has been, are we going to keep the program approximately the same but adjust various of these thresholds in it? And the third, I think, is a broader one of, should the program be doing more and cover more aspects that
The gentleman's time has expired.
And I'll be happy to answer questions on any of that.
Thank you very much. Mrs. Heck, you are now recognized for 5 minutes for your opening oral remarks. You might want to hit your microphone.
Chairman Flood, Ranking Member Cleaver, and members of the committee. My name is Elizabeth Heck, and I am Chairman, President, and CEO of Greater New York Mutual Insurance Company. I am pleased to have the opportunity to testify in the Terrorism Risk Insurance Program and the vital role it plays in helping protect
If the gentlelady will suspend for just a second, we got to move your microphone a little bit closer to you.
I'm sorry.
You're fine. There we go.
Okay. Okay. I'm pleased to have the opportunity to testify on the Terrorism Risk Insurance Program and the vital role it plays in helping protect our country and economy. I am testifying on behalf of NAMIC, which represents more than 1,300 member companies. My views are informed by my firsthand experience as a major writer of terror-exposed commercial property, both before and after the events of 9/11, as a member representing small and mid-sized insurance companies on FIO's Advisory Committee on Risk-Sharing Mechanisms, as chair of NAMIC's TRIA Task Force, and most importantly, as someone who was in Lower Manhattan that morning. Amid the smoke and dust, fire, and falling debris, I was forced to flee my apartment building with my 2 small children and my mother. Thankfully, we were able to make it safely out of the city, but like so many others, we never returned home. For over 100 years, Greater New York Insurance has provided policyholders with the vital support necessary to protect and grow their businesses. The company was formed in the early part of the 20th century by a group of immigrant property owners who were denied insurance. These property owners found a way to do it themselves by forming a mutual insurance company. Today, we write business in 17 states and are the largest writer of commercial multi-peril business in New York. After 9/11, every financial institution began requiring terrorism insurance for development, construction loan agreements, and new commercial loans on existing properties. In the new reality, the challenges of trying to underwrite terrorism coverage became all too apparent, leading to canceled projects and insurers scaling back coverage needed by the business community. To understand why TRIA is needed, you must first understand why terrorism is not insurable in the private market. Unlike natural disasters, terrorism is driven by human intent that is adaptive, which makes it unpredictable. Wildfires, on the other hand, do not change their paths to find a way around protective measures. Tornadoes do not intentionally aim for population centers, and a hurricane will not change its path to target only unprepared communities. Terrorists intentionally seek vulnerabilities to maximize damage and casualties. Further complicating terrorism risk is that the information that would normally be used to model potential exposure is understandably classified as a matter of national security. Because of this, credible modeling for the purpose of underwriting is simply not feasible. The situation in late 2001 and 2002 was dire, and the gridlock created by this attack posed a real and significant threat to our economy. My company was deeply involved in finding a solution because of the unique nature of our business, and my predecessor at Greater New York testified before this committee several times to explain why a public-private partnership was essential and why the program should work for carriers of all sizes. The Terrorism Risk Insurance Act was passed in 2002, which unlocked the market for commercial development. The program allows insurers a degree of certainty, enabling companies of all sizes to offer coverage, creating a competitive market and affordable premiums. In the wake of an attack, insurance companies are able to understand their obligation, and any money provided by the federal government following an attack will be repaid with interest in all but the most extreme scenarios. The creators of the program understood the importance of having a diverse pool of small and mid-sized and large insurers participate in the program. TRIA works because its mechanisms, deductibles, and recoupment are based on individuals' companies, which means it scales according to company size. If the threshold for federal involvement or those deductibles are increased significantly, offering terrorism coverage could become a bet-the-company risk for all but the largest insurers, which would force us and many other companies out of the market. In turn, this would reduce competition and the availability of terrorism coverage. As we look back nearly 25 years after the attacks, it's important to recognize how much construction and economic development TRIA has supported, all virtually at no cost to the taxpayers. I respectfully offer 3 principles to guide the committee's work. First, longevity. We recommend extending TRIA 10 years because short-term reauthorizations cause uncertainty. Second, simplicity. The program is effective in its current form and taxpayers are protected, so avoid fixing what isn't broken. And third, speed. Because of the timing of insurance contracts, the sooner the program is reauthorized, the sooner businesses can move forward. Mr. Chairman and members of the committee, thank you once again for the opportunity to present testimony on this issue of vital importance to me, NAMIC member companies, the insurance industry as a whole, and the U.S. economy. I look forward to answering questions today.
Thank you very much. Ms. Sartain, you are now recognized for 5 minutes for your oral remarks, and if you could pull your microphone close, that'd be great.
Good morning, Chairman Flood, Ranking Member Cleaver, and members of the committee. My name is Michelle Sartain, and I'm president for Marsh's U.S. and Canada Division. I appreciate the opportunity to discuss the reauthorization of the Terrorism Risk Insurance Program with you. For our company, the impact of terrorism is deeply personal. Marsh McLennan lost 358 friends and colleagues on September 11th, 2001. Marsh and Guy Carpenter are market leaders providing risk advisory, analytics, and brokerage services to insurance buyers, insurers, and reinsurance companies. As such, we have a unique perspective on the terrorism insurance market. We consider TRIA to be a model public-private partnership. It restored insurance capacity at a critical time following 9/11, and it continues to ensure a well-functioning terrorism market today. TRIPRA is the reason that policyholders have access to affordable and widely available terrorism insurance coverage, which allows investments to be made and the economy to function. Today, I will address 4 aspects of TRIA that underscore its importance. First, the key features of the program that have helped its overall effectiveness. Second, the risks if the program is not reauthorized or is reauthorized too close to its expiration. Third, the role of the program in workers' compensation. And finally, the trends in the commercial marketplace that emphasize the importance of TRIA. First, the program's design has proven remarkably effective over the past 2 decades. TRIA provides transparent federal backstop that shares catastrophic terrorism losses between the private sector and the government. By requiring insurers to make coverage available and by setting clear deductibles and loss-sharing thresholds, the program stabilizes the market without crowding out private capital. It has fostered healthy competition and enabled the development of private market products that expand protection and complement TRIA. Its existence ensures the broad availability of coverage across all sectors, from businesses in high-risk urban centers to critical public infrastructure to vital healthcare and educational systems. According to Marsh data, the healthcare sector has a 61% TRIPRA uptake rate, one of the highest, and education sector has a 47% uptake rate, reflecting a strong reliance on the backstop to prevent financially devastated losses from terrorism. Hospitals and education systems represent symbolic high-impact targets because they hold concentrated large numbers of vulnerable individuals and America's youth. Without TRIA, healthcare and education sectors, indeed many parts of our economy, would be unable to secure insurance required by lenders, bondholders, and governing boards at a reasonable and predictable cost. Second, failing to reauthorize or reauthorizing too close to the program's sunset date has serious consequences. Uncertainty alone causes markets to withdraw coverage, insurers to pull back, and capital markets to tighten. Without certainty, policyholders face higher premiums, narrower terms, and outright non-renewal. For sectors like commercial real estate, construction, and energy, where terrorism coverage is contractually or regulatorily required, it could stall transactions, slow development, and ripple across the broader economy. Third, the program is especially vital to the workers' compensation market. Workers' compensation policies do not include any stated policy limits or specific perils. Thus, terrorism and NBCR attacks cannot be excluded. That means that insurers are exposed to unlimited losses in the event of attack. Insurers can only reduce their exposure by limiting the number of employers for which they underwrite coverage, especially in areas of high employee concentration. State-funded workers' compensation pools could be exposed to significant losses and insolvency without TRIA. The program is essential for maintaining solvency and stability. Finally, in my written statement, I provide an overview of the commercial market trends concerning things like cyber attacks, the role of captives, and trends in violent attacks. Broadly rising geopolitical instability and the evolving nature of terrorism underscore the continued importance of TRIA. While the U.S. P&C market was profitable in 2024, that was preceded by 4 years of loss-adjusted unprofitability. For catastrophic scenarios, the private market alone cannot provide sufficient coverage. Reauthorization signals stability to the U.S. and global markets. reassuring investors and policyholders alike. In short, TRIA has worked exactly as intended. It protects taxpayers by requiring meaningful private participation, supports economic resilience, and ensures that American businesses and workers have access to critical coverage. Thank you for holding the hearing early, and I look forward to your questions.
Thank you very much. Mr. Schupp, you are now recognized for 5 minutes for your oral remarks.
Chairman Flood, Ranking Member Cleaver, and members of the subcommittee, good morning. My name is Jason Schupp, and I have been closely involved with TRIA since the legislation was first introduced nearly 25 years ago. After retiring from the insurance industry, I formed Centers for Better Insurance as a self-funded platform to provide policymakers, regulators, and other insurance industry stakeholders with independent analysis of important insurance laws and regulations, including TRIA. In 2015, Congress directed Treasury to collect extensive information from participating insurers and publish an analysis of that data every other year. We now have the benefit of 10 years of data and 5 reports from Treasury. Each of Treasury's reports reveals that large corporations have established their own special purpose insurance companies, known as captives, to access the Terrorism Risk Insurance Program. In fact, this data proves that after a large terrorist attack, up to 96 cents out of every dollar that would be paid out under the program would go to large corporations through their captive insurance subsidiaries. The officers and directors of a captive are almost always the executives of the parent organization, such as its CFO, general counsel, head of tax, and risk manager. By controlling both sides of the negotiations and with the comfort that the federal program will bear 80% of terrorism losses, captive owners have been very generous with themselves. As an illustration, for a mere $10 million premium, the New York Times Company negotiated a $1.3 billion terrorism insurance policy with its captive that even includes coverage for nuclear, biological, chemical, and radiological terrorist attacks. Under this one policy, the Terrorism Risk Insurance Program is on the hook for up to $1 billion of losses after the captive satisfies a token $20,000 deductible. The New York Times is hardly unique. Amazon, for example, negotiated a $2 billion terrorism insurance policy with its captive. Indeed, in half the scenarios that Treasury has tested, captive insurers and their large corporate parents take at least 90% of program benefits. Unfortunately, this problem is much, much worse than simply sophisticated companies figuring out how to exploit benefits under a federal program. Treasury is required by statute to recoup 140% of program payments through surcharges on all property and casualty policyholders. In other words, whatever the program pays to captive insurers, Treasury then marks up by an additional 40% and bills all American commercial property and casualty policyholders. In one scenario that Treasury developed in Washington, D.C., a truck bomb over at Metro Center, captive insurers would receive $2.1 billion from the backstop, but captive policyholders would wind up paying less than 10% of that amount in surcharges, somewhere around $200 million. In stunning contrast, all other insurers participating in the program would receive a total of only $243 million, but their policyholders would pay 12 times that amount in surcharges, an astounding $3.1 billion. Treasury's data shows after a major terrorism attack, captives and large corporations get billions of dollars, but only pay millions of dollars in surcharges. On the flip side, the insurers of small businesses, local governments, and nonprofits receive millions of dollars, and their policyholders pay billions of dollars back into the program. The real picture is probably even more lopsided than Treasury's reports reveal. Because of state secrecy laws that protect captives and their owners, Treasury collects data from only about 15% of U.S. licensed captives And even then, Treasury has no idea who owns them. Through my own research, I've uncovered a captive insurer licensed right here in the District of Columbia that is ultimately owned by a sanctioned Chinese military company. This is not the first time captive insurers have been structured to undermine a federal program. 10 years ago, the Federal Housing Financing Agency kicked captive insurers out of the Federal Home Loan Bank system after it learned that these captives had been used to funnel $35 billion in low-cost loans to their ineligible corporate parents. There are solutions, and I look forward to discussing those in questions and answers. Thank you.
Thank you. Commissioner Mays, you are now recognized for 5 minutes for your oral remarks.
Chairman Hill, Chairman Flood, Ranking Member Cleaver, members of the committee. My name is Andrew Mays. I'm the Insurance Commissioner for the great state of Connecticut and past president of the National Association of Insurance Commissioners, or NAIC, which represents the primary insurance regulators of the 50 states, the District of Columbia, and the 5 territories, and I do appreciate the opportunity to be here today. Thank you for inviting me to testify today before this committee, and thank you for addressing this important issue more than 2 years before TRIA, the Terrorism Risk Insurance Act, is set to expire, as noted, on December 31st, 2027. Your forethought is both appreciated and necessary as insurance and reinsurance contracts and decisions to deploy capital are made months, if not years, in advance. Furthermore, business decisions that depend on access to commercial insurance, from deciding to break ground on a commercial space to starting a new business or building more housing, are often years in the making. So understanding that insurance will be available is critical to supporting the continued growth of our communities and the economy. State insurance regulators have supported TRIA since its inception. Our job is clear. We want to make sure insurers can pay claims, keep the market stable, and ensure that coverage is available. And TRIA is the best type of partnership between the private market and the government. The government's involvement in this instance creates the appetite for a private market to exist. And let me be clear here. Absent TRIA or a similar solution, we do not believe private insurance carriers would make meaningful capacity for affordable commercial terrorism coverage available. And this is especially true for smaller and mutual companies. Insurance is well suited to protect against losses from events where one can make reasonable assumptions about the frequency and severity of loss, car accidents, house fires, slip and fall injuries, for example. But this basic concept of insurability does not apply to terrorism, where neither the regulators nor the industry possesses the necessary insight or data to anticipate the frequency or severity of a terrorist attack or its impact on the insurance industry's solvency. And furthermore, policyholders lack sufficient knowledge to truly mitigate their risk. Elsewhere, you can choose to drive carefully or not, you can install smoke alarms or not, but terrorism is ultimately an attack on the values that we all share as Americans, regardless of whether it's a foreign or domestic actor, and regardless of where it occurs. If our government is the embodiment of the values that terrorists are attacking, it stands to reason that the government does bear some responsibility to absorb the financial impact of such an attack. The tragic 9/11 attacks resulted in more than $40 billion in total insured losses, of which nearly $25 billion was just property losses. Now, at the time of the attack, that was greater than the historic average natural disaster losses of the entire U.S. property casualty industry in a typical year. Insurers have a tremendous capacity to absorb losses, but they are vulnerable to a tail event with massive impact. TRIA removes that tail event risk. By doing so, the private market can manage at least one variable, severity, and offer coverage at reasonable prices. To keep commercial coverage available, we support a long-term TRIA reauthorization of 7 to 10 years. TRIA stabilizes not only the insurance sector, but the broader economy. Businesses and consumers that live, work, and shop in communities in every state benefit from a stable insurance sector which provides commercial terrorism insurance only because TRIA exists as a backstop. The stability has come at little cost to the federal government, fortunately with no claims paid since its creation, knock on wood again, while ensuring a market that takes on billions of dollars in risk that would otherwise go largely uninsured. It is also worth noting how TRIA handles more exotic terrorism risks, including, as mentioned, nuclear, biological, chemical, and radiological events, or NBCR. TRIA does not force insurers to cover these extreme risks, nor does it override policy exclusions. It only provides a backstop for losses the insurer has already contracted to cover, and this keeps insurers responsible for their coverage choices while ensuring a federal safety net for extreme terrorism events. Without TRIA, the question is simple. Should taxpayers cover the first dollar of losses or the first dollar after the insurance industry has paid out more than $53 billion? Thank you, sir.
Thank you, sir. We'll now turn to member questions. I now recognize myself for 5 minutes for some questions. Mrs. Heck, kind of a two-part question to start with you. Can you describe the state of the market before the terrorist attack, September 11, 2001, and then how did the market react in the aftermath of September 11th? Oh, yeah, get your microphone.
I have to get this right, but thank you for the question. Prior to the attacks on September 11th, the concept of terrorism didn't even exist in insurance contracts. So overnight, we all of a sudden had this exposure that could potentially sink, every insurance company. So, immediately after the attacks, companies had to recognize that exposure and pare down concentrations. So exclusions were added to policies, companies were withdrawing from markets. It caused, banks to stop lending, construction projects halted. So essentially, the economy just froze in place until TRIA was put together. Now, the TRIA program was put together in 2002, and almost overnight, the markets began to behave in a way that was competitive, and it made coverage available and affordable, and it continues to work that way today.
Thank you for that. Ms. Sartain, you did a nice job in your opening remarks talking about the implications of what failure to reauthorize TRIA would mean. Two-part question for you. If we failed to reauthorize TRIA by, let's say, January 1, 2027, what would happen to this market? And then number two, what kinds of effects would we see if the program fully lapsed and was not reauthorized in 2028?
Thank you for the question. The insurance market requires stability, and they need to understand what they're on the hook for. So if we wait too long to reauthorize TRIA, many insurance companies will start withdrawing coverage, limiting coverage, or placing sunset provisions in their policy, which means they can write the coverage, but if TRIA is not reauthorized, the coverage will go away. If TRIA is not reauthorized, as we saw in 2015, where it lapsed for about 12 days, the markets do the same thing. They start limiting coverage, they start increasing prices, and they look to sunset the coverage. I don't believe that terrorism coverage would exist if TRIPRA is not reauthorized.
Thank you for that. Mr. Webel, because TRIA has never been tested, the mandatory recoupment provision in the program has never been tested either. Can you help explain how mandatory recoupment works under TRIA, and has there ever been an attempt to conduct an analysis of how recoupment would work in practice?
Yeah, the recoupment basically, it is subject to a significant amount of Treasury discretion as to exactly the percentages that would be placed and how they would be placed. There is ability to change what the premiums look like. The total amount under the law is supposed to be recouped is 140% of the outlays. There is a time schedule in the law depending on when exactly the terrorism attack occurs and when these recoupments have to come back. This time frame is frankly a little unrealistic, I think, particularly for a large-scale attack. So I would expect a future Congress to definitely revisit those provisions in the aftermath of attack at the end of the program.
Thank you for that. Okay, fast fact here. You might not know this, but when the Cornhuskers are playing football in Lincoln, the stadium becomes the third largest city in Nebraska. 90,000 people descend to watch the Huskers play football. Ms. Sartain, talk to me about the impact TRIA's non-authorization would have on colleges and universities, given their role in America and what all happens there.
Absolutely. Colleges and universities and educational systems are some of the biggest buyers of terrorism risk insurance. As I mentioned in my comments, they represent a symbolic part of the American culture, and it's also where our young people go to learn and educate and become part of our economy. So when you have concentrations of individuals in one location, unfortunately, they become a prime target for potential terrorist attacks. The universities need to make sure that they can insure the property as well as the individuals, and TRIA provides the backstop that gives them confidence to secure both the private insurance that's available in the market as well as what's available through the backstop.
Thank you very much. With that, I yield back. I now recognize the ranking member of the full Financial Services Committee, Ms. Waters, for 5 minutes.
Thank you very much. Commissioner Myers, when TRIA was first established in 2002, it was designed as a temporary program with the expectation that the private insurance market would eventually assume the risk of terrorism coverage and affordability. However, time has shown that absent TRIA, private insurance carriers would not fill that gap. Since then, TRIA has been reauthorized 4 times. In your view, if TRIA were to expire, would the private market be able and willing to absorb these risks without jeopardizing market stability or coverage availability? What are the benefits of having a longer reauthorization, say 10 years or even longer, to our communities in order to provide stability and consistency for their economic development?
Thank you, Ranking Member Waters. One of the important things that we all face, everybody who's run a business, everybody who's a regulator understands that certainty is important. When it comes to insurance, that certainty is even more important because, as I mentioned in my opening statement, the capital commitments that are necessary are made in advance, and the coverage has to be available in advance. So, for instance, if TRIA were to expire and not be renewed, what we would expect is that all the coverages that would begin after January 2026, that would be filled with uncertainty. I would expect that, as Ms. Sartain said, what happened if TRIA were not renewed would be the same thing as we saw after 9/11. The coverage was not available. Coverage was, and even if it were, it would have been too expensive. And we had significant problems, significant knock-on problems, including with mortgages and with buildings. You know, we simply were not able to have we were not able to have the insurance coverage that provided businesses with the certainty that they could continue, which means that communities were affected. Big part of that is that this is not a normal risk. Again, to go back to normal risk, if you've got pretty much everything else, even your natural catastrophe risks, those are huge. But we can do things to help mitigate the damage. And we know we can have a good idea, we can model that damage well. Terrorism, we have no control over. Terrorism, it's hard to price properly. So what would happen is that even if terrorism insurance were by some magic affordable, it would be unavailable. Or so if it were available, it would be unaffordable. And that's what we are afraid of. We as regulators want to make sure that A, the insurers are around to pay the claims, that consumers get the coverage they need, and all of this is made possible when it comes to terrorism because we have TRIA as a backstop providing that certainty. Thank you.
Let me just speculate here for a moment. You probably, have been involved in a lot of conversations about what happened in California in our wildfires with one of our communities in particular have suffered greatly. And there are a lot of problems that we're finding out about as it relates to what happens when you have this kind of catastrophe. And one of them, and I don't want to have to ask this question of you because it may be way out of your range here, but a person receiving disability, for example, had devastation, and the insurance company, of course, was responsible because he paid his premiums, he's paid up all of that, but he's being told now that if he takes the insurance money, that he loses his disability. And if he doesn't take his disability, even though the insurance company is going to pay up, he still need money to live on every day. And so I just made aware of this problem, and I'm taking a look at it. But all these kinds of problems are surfacing as it relates to insurance. And I'm sure you've heard about a lot of these. If you have any suggestions at all, based on anything that you know or you're hearing that needs to be corrected, what needs to be strengthened, needs to protect our premium payers, I would certainly like to have you share that with us.
Thank you, Congresswoman. The North Star for U.S. state insurance regulators is consumer protection. No system is perfect. We do recognize that, and that is exactly why we have systems in place to address this. You speak of the wildfires in California. I will tell you it was probably a month or two ago that we, a whole bunch of us insurance regulators from all
The
across
gentlelady's time has expired. Thank you. All right. The chairman of the full committee, gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Thank you, Chairman Flood. Thanks again to the panel for your constructive help on thinking through this reauthorization. Mr. Webel, let's start with you. Thanks for all of your advice to Congress over many, many years on this topic. I think you've now studied all 4 reauthorizations. What is your observation about this program's effectiveness? In other words, you've now seen it be reauthorized. What's your view on some of the things you've heard today as to the essential nature of it?
I mean, I think it's obviously been very effective in keeping the market going. It's also, I'd observe, an insurance program that never actually has to operate or pay out always looks very effective. And so I think that there are some questions and probably appropriate congressional oversight of Treasury in terms of, are they prepared if we did have an attack? What do their systems look like? What would it be going forward? And particularly since it was set as a temporary program to begin with, whether or not, if, as listening to people, it seems like it may be a permanent, essentially permanent program, were all of the structures that were put in place when is it a temporary program, does that make sense if it's going to be around for the duration?
Mm-hmm. Does Treasury, to your knowledge, do like tabletop exercises on this? And do you feel that you're not the Inspector General of Treasury or this program, but from your observation,
I mean,
is the government functioning in a way like they're prepared to
I believe
operate?
so. I mean, I have had interaction with the Treasury and FIO office on various things of this over the years, and I've always gotten, what I needed out of them when I had questions, and I believe in general that they are doing a good job of being prepared. But I've also, as a creature of Congress over the years, observed that sometimes it's not a bad thing for Congress to ask questions too.
Yeah. So you think as a part of this, we should do that and have the committee assess the operational aspects that the authorization directs at the Treasury?
I think that's, as I said, always a reasonable thing for Congress to do.
And when you look at these reauthorizations, do you have comments on whether both policyholders and insurers have a clear set of expectations about how the program would work if it ever were deployed? How do you feel about that?
I mean, I think that the expectations really aren't as clear as they could be, especially in the realm of nuclear, biological, chemical, radiological. I remember past hearings where I would hear, people in your seats talk about scenarios where this would be particularly needed. And the sort of typical disaster scenario for a high-level terrorist attack goes to a suitcase nuclear weapon in Manhattan or bombing a chemical train that's going through an area. And I remember thinking to myself in various points, it's like, that wouldn't be covered under TRIA because most private policies would exclude that sort of thing, and the program works through those private policies. So I think there's a hole in the expectations, particularly when it comes to that.
Well, I think your perspective is really helpful and appreciate the panel's views as well. I mean, I think that clarity of what we're insuring and what we're not insuring and how it works in practice is very important, and it should be assessed carefully. And I want to thank you, Mr. Chairman, for the hearing, Mr. Cleaver, and I yield back.
Gentleman yields back. The ranking member of the subcommittee, gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Webel, you know, the chairman and I are from the same center of the country, Nebraska, Missouri, and so there is sometimes this misguided perception that only the West Coast or the East Coast, New York or Los Angeles, are places that should think about TRIA. Would you please explain why TRIA is important in different regions of the country?
Sure. And I'm from the southern part of Illinois, so a long way from Chicago, so I do understand. And I think that the chairman mentioned, particularly, a Nebraska stadium that's full of people. Educational institutions need terrorism coverage too. We have large-scale universities across the country. There's any number of potential places that a terrorist could attack that would cause damage that people don't think about. And it's precisely the terrorists are seeking those sorts of places to attack. So I do think that the coverage is needed in places outside of Los Angeles and New York, and that the TRIA has helped get coverage to those places.
Thank you very much. Mr. Mays, in your testimony this morning, you note, and I quote, "The question is simple. Should taxpayers cover the first dollar losses or the first dollar after the insurance industry," unquote. And I actually agree with you that with or without TRIA, the federal government would step in, and TRIA is the best outcome for taxpayers. But how long would you like to see TRIA reauthorized? Understanding the trade-offs and so forth.
Short answer to that is as long as possible. That is certainly up to this committee, but certainty for all of us is best.
Yeah, actually, it's not up to this committee, but I do think that the entire Congress would very likely agree with what you just said. I just want to make sure that gets on the record. Ms. Heck, over the years, some have argued that TRIA is effectively crowding out the private reinsurance market by providing federal reinsurance. If the private reinsurance industry were willing and able to provide this coverage, then I would expect them to lobby against TRIA in order to push out the competition. And yet, that is not the case. In fact, in 2024, Treasury report stated, I quote, "Treasury has not observed any aspects of the program that have discouraged or impeded insurers from providing property and casualty claims, and that TRIA is actually not crowding out the private sector." What say you?
Thank you for the question. The program actually encourages the private marketplace. If the program weren't in place, there would be very few market participants. And we saw that in the aftermath of 9/11, and of course in 2014, even though it was only for 12 days, we saw the market reaction. So it's precisely because of the program that we see private participation. Now, one thing that I want to impress upon you is the fact that in order for the coverage to be available and affordable, it's important to have a range of carriers involved in the program, which means making it possible for small, mid-sized, and large carriers to participate, which means that the triggers and the deductibles matter.
Thank you. Mr. Chairman, I yield back.
Gentleman yields back. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Flood and Ranking Member Cleaver, for holding this important hearing, and thank you to our witnesses for being with us today. Ms. Heck, I want to follow up on where Congressman Cleaver just was, and Mr. Webel, I'll come to you as well, because I'm kind of curious why do you believe a private market would not naturally form here and be robust. What's your, I mean, I have my own intuition or suspicion there, but tell me why you think that's true, if TRIA was gone.
Because well, first of all, we don't have to guess, because we saw it happen, and the reasons for that is because the exposure is too large and too unpredictable that carriers, the private market, isn't willing to put their capital at risk at something that they can't quantify.
Impossible to underwrite.
It is. It's impossible. So because of the unpredictability and the fact that terrorists can change where they attack just because they choose to, you can't use the past to be able to predict the future. And any of the metrics that could help in trying to model that exposure is protected as a matter of national security. So it's just not possible.
So isn't a part of that kind of the implied or implicit belief that the government will backstop this would be required to in some way? Do you think that's true? Is that what is also driving those who might desire the coverage to not go seek it out because they think, well, the government's going to be there for us?
Yeah, I actually think it's the opposite. Because the backstop is there, the private market is willing to put out limits because they're able to understand what that exposure is. Every insurance company has to manage their capital. And the issue with a terrorism attack is that it is so potentially catastrophic that it could sink the company. So companies aren't willing to put their balance sheets at risk because it would cause multiple insolvencies. So because the backstop is there and the government can step in, it makes it possible to put out limits because there's some certainty. And the really good news about the program is that taxpayers are fully protected because every dollar is paid back 40% higher than what the government outlays. So it's just a way to smooth the losses so that carriers can put some, put out limits.
But I have some skepticism about whether we would actually recover that money after the fact, and so I wonder, shouldn't there be a more proactive plan for, putting something away for a rainy day, if you will?
Well,
even though this has never been triggered, right? Not once.
In my opinion, it isn't necessary because what we've seen over the past 24 years is having the backstop in place. It's allowed for a viable market. I don't know that would necessarily add anything because at the end of the day, the Treasury Department has the authority embedded in the law to collect the money, and they also have the authority to be able to collect more than what is provided for in the statute.
Do you think that we should in some way index the triggering numbers so that over time they don't become small enough that they're maybe ineffective? So the $5 million and $200 million trigger, I mean, if we index those from when TRIA was originally put in place, they'd be quite different today. Should we do that so that the program doesn't become kind of obsolete in that regard?
Well, I'll talk about the two triggers separately. So with regard to the $200 million trigger, I do not think that trigger should be changed in any way because the trigger actually prevents market participation for small carriers because of the way that the make available provision works, which requires every company to offer the coverage if for every eligible line of business, a smaller company could be in a position where a scenario happens, they have made the coverage available, they sustained losses, they've exhausted their deductible, but they can't recover under the program because the trigger is too high. The large companies aren't impacted by the trigger. So I would argue the trigger doesn't do much to protect taxpayers in any way.
Thank you. My time's expired. I appreciate your answers.
Gentleman yields back. The gentlewoman from New York, Ms. Velasquez, is now recognized for 5 minutes.
Thank you, Mr. Chairman and Ranking Member, for this important hearing. For me, this is deeply, deeply personal. I know exactly what I was primary day in New York City for mayor, and I was standing in front of a school. My staff called me and said something happened at the World Trade Center, then another call, another tower, and I realized that something was really, really wrong. So I would like to ask you, by a show of hands, does anyone on the panel think the TRIA program should not be reauthorized? Good. Ms. Sartain, the program is not currently set to expire until 2027. But can you explain why it is important to reauthorize the program early and why a long-term reauthorization is needed?
Thank you for the question. Again, insurance companies and policyholders require stability so that they can make future plans. As we saw in 2015 when TRIA lapsed, insurance companies needed to respond to limit the capital that they had exposed, and so we saw policyholders losing coverage, seeing increased premiums, or seeing sunset provisions in the policies that were placed. So by reauthorizing early, we allow the insurance market to continue to function well and smoothly, as well as managing the expense associated with this risk.
Thank you. Mr. Schupp, you say in your testimony, and I quote, Treasury repeatedly raised concerns that captive insurers could be structured to game the program. Can you please explain this statement?
Certainly. Thank you. In the early years of the program, Treasury had acute concerns that a captive insurance company, which remember is just a subsidiary of a non-insurance company, most Fortune 500 companies have one, that because the deductible, which we've talked about, is 20% of prior year direct earned premium, that deductible, by utilizing a captive, would be tiny. So in my example of the New York Times, and I picked them because I can get to that data. This data is very hard to find. They have, last year, they had total premium in their captive of about $800,000, maybe $850,000. That gives them a $19,000 deductible under the program. After that, Treasury's on the hook for 80% of losses. In contrast, a company like an AIG or a Travelers may have a backstop deductible of $2 billion.
How should we address this concern?
I think there are two ways to address it. Number one is information, some transparency, both to Treasury and to the public. So Treasury is not able to collect data from these captives. It's shooting in the dark, where everyone else gets data through the NAIC, all the other participants. So who's actually participating in it, and who's behind them? What corporations are actually running it? Secondly, there's a way very simple way to cut off the subsidies that are running, and I cover that in my testimony.
Thank you. Ms. Sartain and Ms. Heck, if you please also address this question. Every time we discuss the reauthorization of TRIA, we debate the program's triggers. Currently, the federal government provides co-insurance of 80% of losses up to $100 billion cap if the losses exceed an initial deductible of 20% of an insurer's annual premiums for commercial property. Do you think adjustment to any of these levels are necessary, even for inflation?
Maybe just two ways to think about that. Because of the way that insurance is underwritten, based on the values of the buildings or the risk within it, there is an automatic indexing that comes through the premiums that are charged. Secondly, when it comes to what the triggers are, I think the most important thing is that there is certainty as to what those triggers are, and there's not a shock to the insurance markets or the policyholders as to the change in those triggers. In terms of changing the triggers, I would suggest that there be a thorough study of the impact of those triggers on policyholders and the broader economy.
To add?
Yeah, so to add to with what Ms. Sartain said, just to give you an example, my company, for example, our deductible post 9/11 in 2002 was $10 million, and today it's $250 million. So to Ms. Sartain's point, there is an automatic indexing that happens because the basis for calculating the deductibles
The gentlelady's time
already
has
considers
expired.
inflation.
Thank you very much. Gentlelady yields back.
Thank you, I yield back.
The gentleman from Montana, in fact, he's the former insurance czar of Montana. Mr. Downing is now recognized for 5 minutes.
Well, thank you, Chairman Flood. Thank you, Ranking Member, and thank you to the witnesses for being here today. And Commissioner Mays, great to see you. Please send my regards back to my former colleagues. The Terrorism Risk Insurance Program was essential to stabilizing insurance markets after the September 11th attacks. And I'm glad we're having this hearing to evaluate the effectiveness of the program and its future. As many of you know, I've long called for the elimination of the Federal Insurance Office, or FIO, under Dodd-Frank. FIO is directed to assist the Treasury Secretary in administering the Terrorism Risk Insurance Program. However, this program existed nearly a decade prior to the creation of FIO, and as far as I know, without any issues. I'm going to start with Mr. Heck, or Mrs. Heck, I'm sorry. Can you tell me what role FIO plays in the Terrorism Risk Insurance Program and how it operated prior to the creation of FIO under Dodd-Frank?
Yeah, so prior to the creation of FIO, the program functioned just fine. There is a small office, the TRIP office is part of FIO. There's a small number of people that participate, and there's no reason why those people couldn't continue to operate in the event of attack.
Right, so to be clear, the program operated just fine before FIO.
Correct.
If FIO was eliminated today, how would that impact the program?
I don't think it would impact the program at all. I think that, again, there are a few people within the TRIP office, which is a subsegment of FIO, that could, continue to administer the program and assist the Treasury Department after an event.
Right, thank you. Mr. Webel, what are your thoughts on FIO and the Entria?
I think that, since the last 10 plus years, it's felt like there's been more activity because of FIO, but that's also coincident with the additional responsibilities put by Congress when they reauthorized it in 2015. So you see a lot more activity, a lot more reports coming out under FIO, but it's not necessarily clear, is that because of FIO, or is that because of the fact that Congress has basically asked the Treasury to do this?
All right, thank you. So as mentioned earlier in this hearing, TRIA was intended to be temporary until the private markets stabilized and we were able to accurately model and price in the risk of terrorism. Mr. Webel, to you again, has the program met these goals?
Strictly speaking, no. It's a 3-year temporary program. It's 22 years later, it's still here. So if you take the Congress at the time that said it's going to be 3 years, then it did not meet the goal of going out of existence. I think it has met the goals of backstopping a terrorism market and mitigating some of the broader economic damage that a lack of terrorism insurance would have.
So staying with you, Mr. Webel, what might the private market look like when a federal backstop is no longer needed?
I think it would look different, certainly very different in a sense that there are all the problems about modeling terrorism that other people have gone into. It would definitely be smaller. I think a lot of the risk would remain on bank balance sheets, much as you see in some other areas where if a bank has a choice between writing a loan and you can't get terrorism coverage, are they going to still back the project? In some cases, they probably would. So the risk would still be there, but it would probably be more diffuse throughout the financial sector.
So what would, if any, what would the alternatives be to a federal program?
You would have some more private reinsurance, perhaps. You would have some primary insurers that might continue to take on some of the risk. Or, as I said, you would have banks and lenders that would essentially be taking on the risk.
And how are other countries, how do they account for this risk?
Most other countries, or many other countries, do have some forms of backstops. Some of them have terrorism specific. Some of them roll it into a broader catastrophic program that doesn't just cover terrorism, but also might cover wind or flood or other catastrophic events.
All right, thank you. Mrs. Heck, I saw you kind of wiggle there when I was asking that, so it seems you might have something to say about the private market without a federal backstop.
Yeah, I would argue that without the program, there really wouldn't be much of a private market. And to your question as to what would happen after an event, I think the federal government would probably feel the need to step in to be able to stabilize the economy. The way the TRIA program works, it actually allows for that to happen with recoupment so that taxpayers are protected. So in a sense, what TRIA is doing is it's preventing the government
Gentlelady's time has
intervention at
expired.
the end.
Thank you.
Thank you, Mr. Chairman. I yield.
Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you. Every year, thousands of people from every walk of life come together from around the world for the Boston Marathon, starting in Hopkinton. Runners traverse 26.2 long miles past schools, homes, and businesses towards the finish line in Boston's Copley Square. In April 2013, what was supposed to be a festive Monday celebration for the Boston community with smiles and hugs turned into a nightmare we will never forget. The terrorist attack at the finish line robbed us of precious souls, injured hundreds who are still recovering from physical injuries and invisible wounds, and traumatized thousands. My neighbors in our community are still healing from tragedy, which is why I drafted in close partnership with marathon survivors the Post-Disaster Mental Health Response Act. This was signed into law in 2022. It's legislation to extend FEMA's crisis counseling supports to survivors of terrorist attacks. And it is why I especially appreciate today's hearing focused on reauthorizing the Terrorism Risk Insurance Act, also known as TRIA. For the general public, TRIA is a form of insurance to cover the economic losses to businesses and is critical to rebuilding community after a terrorist attack. It supports brick and mortar shops that are physically damaged, and it helps business owners pay their employers so no worker has to worry about bills while focusing on recovery. But TRIA could be strengthened to better meet the needs of cities and states. In the aftermath of the Boston Marathon bombing, businesses waited for weeks, months, and ultimately more than a year to learn if the Treasury Secretary would classify the assault on our city as a terrorist attack. That classification is the essential first step in determining if insurance payouts will be backed by the government. Mr. Webel, can you explain why Treasury may take lengthy time periods to classify a terrorist attack?
I mean, I think there's obvious difficulties in terms of attribution of terrorist attack. Who exactly performed it, that's critical in determining a certification. I think in the case particularly of the bombing in Boston, the biggest issue was the insured losses not meeting the $5 million certification. And the fact that it is property casualty losses, not losses to life and limb and health insurance that count. And so I think that in some ways, a lot of the difficulties here revolve around the integration of what is a reinsurance program, TRIA, in primary insurance coverage, which is the coverage that the insurers are giving to the businesses that were around the bombing. In most cases, primary insurance would go ahead and pay, whereas if there was reinsurance coverage in the private sector, there would then be a negotiation between them. But this intermixing of the two causes, I think, confusion.
Thank you so much, Mr. Webel. And Commissioner Maz, insurers and businesses alike want certainty on the timing of whether an event would be declared an act of terrorism. What are the consequences of delays in getting a response from Treasury?
The consequences of delays in getting a response from Treasury post-event, is that what?
Yes.
You know, I'm uncertain as to how to respond to that because, frankly, TRIA is run by Treasury. There are very definite requirements that must be met, as we saw in the Boston Marathon, as was just explained.
Okay, fair enough. Let me ask a question because the clock is ticking here. Mr. Webel and Commissioner Maz, there is a proposal to require Treasury to respond to requests for classification from a governor within 6 months. And even if denied, a governor can make the request again. This would offer certainty around response timing, but not finality for an answer. How could such a system help or hinder the current process for TRIA?
I mean, I think it would certainly help the primary insurers to have certainty to pay out or not to pay out based on their policies that revolve around certification.
And again, I would defer to Treasury and the Congress, but certainty always helps.
Okay, thank you. I truly pray that no community experiences a terrorist attack. No one should have to live with that pain, that fear, and that trauma. To my neighbors still struggling in the aftermath and grieving the loss of a loved one or what could have been, know that your Congresswoman sees you and your family. I yield back.
Gentlewoman yields back. Quick announcement. Don't be alarmed if you hear jets overhead in about 15 minutes. The Blue Angels are doing a scheduled flyover. So I figured with this group of people here today, I want to put you at ease. The gentleman from New York, Mr. Lawler, is now recognized for 5 minutes.
Thank you for that notification, Mr. Chairman. We're here just a few days removed from the 24th anniversary of September 11th, the day that forever changed our country. Unfortunately, the reality 24 years later is that we still have to deal with the threat of terrorism. There are people who do not like us, do not like the ideals and the values of this nation. And we are grappling with the ramifications of the unholy alliance between Russia, Iran, China, and North Korea, and those who seek to undermine and destabilize the free world. We are also dealing with a rise in extremism. In my district, the immediate suburbs of New York City, and where a large portion of my constituents commute into New York City for work, we have deeply felt the impact of past attacks and remain concerned for the future. And to today, my district continues to deal with the ramifications of 9/11, with first responders continuing to die from 9/11 related health illnesses. New York remains arguably the largest target of terrorism in the world. It is critical for our businesses and developers to know both that they have this coverage and that the coverage is stable and sustainable for the long term. Mr. Webel or Ms. Sartain, what, if any, alternatives are there to a free federal reinsurance terrorism backstop? How do other countries handle terrorism risk insurance?
Other countries, as I mentioned, have a various mix of programs. Some focus specifically on terrorism, some rolled into a more general catastrophic backstop. In terms of what a program might look like outside of TRIA, obviously most insurance that you get have premiums of some kind up front. And it wouldn't be impossible to envision a situation where some of the premium dollars that currently flow to primary insurers, and Treasury's estimated that over the life of TRIA, it's probably in the $60 to $70 billion of terrorism premium that's been collected by primary insurers. You could envision a situation where some of that was shared with Treasury for the backstop. The downside to that is that would increase the cost of terrorism insurance. And so to the degree that you want to increase people purchasing the terrorism insurance so that it's in place after an event, if you were to charge premiums for TRIA up front, you would obviously lower that participation rate.
Mrs. Heck or Mr. Schupp, how important is it for TRIA to have clear rules and expectations for both policyholders and insurers? And are there steps that Congress can take to increase certainty in this process should an event ever be certified under TRIA?
So first of all, having clear rules and certainty is critical. It's critical both to insurance companies who are providing the coverage and the business community who needs the coverage. So that's absolutely important. With regard to certainty, should there be any changes to the program has proven over the past 24 years that it's really working the way it's designed. So we don't feel that any legislative changes are necessary. What we do think is important is that there is a swift reauthorization for as long a term as possible, and that is going to provide the most certainty to the market. The second thing that we think is critically important is to not increase the triggers to the extent that it would keep out the smaller companies, because In order to have a market that is thriving and robust and affordable, it's important to have as many companies participate in the program as possible.
Thank you.
If I may very briefly, you have to keep in mind that the provisions of TRIA have made their way into the insurance contracts, into the reinsurance contracts. So when something changes here, it has that downstream effect and creates contractual uncertainty. It's not just a program that hangs behind, but it's actually infiltrated the contracts themselves. So any changes need to be done very early and thoughtfully.
Right, with the TRIA set to expire at the end of '27, obviously anything that would change or the reauthorization needs to be in 2026 to give certainty to the marketplace. Ms. Sartain, TRIA includes a mandatory make-available provision that requires all insurers to offer terrorism coverage to their insureds. How has that requirement impacted the operations of small and larger insurers?
It's required that everybody participates, which means that there is more capacity available in the market than would otherwise be the case.
Thank you. I yield back.
Gentleman yields back. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you, Mr. Chairman. We all know for insurance to really work, it must be able to, I guess, model and predict the likelihood of an event occurring, right, in addition to its impact. However, terrorism risk, and we're talking about this, is incredibly unique here. Much of the information about terrorism risk is not publicly available, right? The number of terror events also doesn't give one a large sample size to draw from in making certain future predictions. So Commissioner Mays, you touched on this in your testimony, but can you give a little bit more detail about why private insurance industry is not well suited to addressing terrorism risk in particular? And it's not just what I said, those factors, but also, and no offense to anybody, it's very pro, just let the private insurance companies do whatever they want. They just don't do, we almost always have to force them to do what is right here, even with high risks, because they're all, very driven by profit and so forth. And I get it, you want to keep the company going and moving. But I think right here, it's in this unique situation, I think it's important for, my residents who are listening in to understand why we have to have this in place.
Thank you, Congresswoman. And yes, you are absolutely correct. The quality of that risk is simply, it's so difficult to predict. So you cannot properly price for it. As regulators, we need to ensure that there's solvency. If you can't tell what the result is going to be, the frequency or the severity, then you're pretty much out there flying blind. And for us as regulators, it would make it difficult to ensure that consumers get the coverage they deserve.
And despite this, someone might still think the private market should be responsible for this insurance, not the government. So, Mr. Webel, when the program briefly lapsed in the end of 2014, did we see private insurers move to exclude terrorism losses?
General, yes. There are provisions put in the contracts calling for that.
I'd like to turn to recruitment because I think starting with mandatory recruitment. Mr. Webel, in your testimony, you write that the mandatory recruitment would be equal to 140% of the difference between the aggregate retention amount and the total amount of insured losses that were not reimbursed by the government. Direct quote from your testimony. First, can you help us understand, okay, my mom's watching, help people understand, because the public need to understand why this is important here. That's my first question, to understand that sentence and explain aggregate retention. Second is the recruitment percentage has changed over time from 100% to 140%. What is the rationale around that change?
Sure, the rationale for that, I think largely revolves around Congressional Budget Office scoring rules, and that post-event recoupment actually would get deducted by insurance companies from other taxes. So therefore, even though it's being paid to the government, it would result in less taxes being to the government in other places. And so therefore, the amount in past reauthorization was increased essentially to allow for this budget neutral scoring with regard to CBO.
Okay. Commissioner Mays, how do you feel about the congressionally determined parameters within the Treasury Secretary, which the Treasury Secretary makes that decision?
We follow the law, and
Are they too restrictive, too loose?
again, we are here to follow the law. And
Are there any
Congress
changes
decided
that
there
you would
was a-
propose?
There are no, that is really not up to us to discuss as state insurance regulators. We just
Yeah.
need to make sure that the coverage is there and that the companies are solvent.
So every time I bring up private insurance companies, the auto insurance industry comes to mind in my district. Everybody's smiling, they probably know. I got on this committee to work on that issue. Does anybody here on this panel know anything about what's going on with the auto insurance industry? Anyone? Oh, Mr. Schupp. Well, because why are they now asking for non-driving factors like the GPA, literally your GPA of your student in college? What does that have to do whether or not you're a good driver? Does anybody know? How about zip code? How about whether or not you have a PhD or you're married? What the heck does that have to do whether or not somebody's a good driver or not? How is that a predictor? Studies show that somebody with the DUI, because he has a high credit score, is paying 3 times less than the person with no DUI but has a lower credit score. Don't you think that's discriminatory?
So insurance is discriminatory, right, by its nature. It's supposed to be
But they're
discriminatory.
asking for the GPA of our kids.
But it's not
What
supposed
the
to be.
hell does that have to do with whether or not we're a good driver?
But it should not be unfairly discriminatory, and I think those are the
I think
questions.
non-driving factors should be prohibited. Thank you.
Gentlewoman yields back. The gentlewoman from Texas, Ms. De La Cruz, is now recognized for 5 minutes.
Thank you, Mr. Chairman, for holding this hearing today. I enjoy serving as the Vice Chair of Housing and Insurance Committee. It's an area that I worked in, I worked in housing and insurance for over 20 years, so this is a meaningful area, and I was taken back by the Congresswoman's comments, because unless you've actually worked in the insurance industry, then you have a better understanding of why these factors are important. And so I would encourage my colleague to actually meet with people who work in the industry and who understand the statistics and what drives actual costs. That put aside, coming from the insurance world, the private insurance world, including auto and housing insurance, it's interesting to learn about this large-scale federally backed insurance program. Very recently, 9/11 just passed, a sad day in our nation's history, and a day of complete terror, especially for our fellow citizens in New York City. And while we hope that a terrorist attack like that never happens again, we do need to be prepared should something happen. And that's why we're in Congress. So creating the Terrorism Risk Insurance Act, or TRIA, was very important and is very important. This is a bill that has been reauthorized 4 times in a bipartisan manner and helps our country, our communities, and our businesses be prepared for the future. One benefit of TRIA is that it helps Americans get reliable and affordable energy by facilitating insurance of critical energy projects built right here in the United States. For Texas and my district, this means TRIA supports jobs, as my state is home to many energy-producing companies, workers, and projects. TRIA makes terrorism insurance remain both available and affordable to energy producers in Texas and across America. Ms. Sartain, excuse if I didn't quite get that right. Without TRIA, is it fair to say that insurance would be unable to offer this coverage, which would leave critical infrastructure like refineries, pipelines, and power plants exposed to catastrophic financial loss?
The short answer is yes. Marsh McLennan Companies also employs people in Texas, as we do across the United States. And the energy sector is an important sector that we serve, understanding that energy security is key to the security of this country. Without TRIA, terrorism insurance would prevent projects from moving forward, prevent things from moving around the country, and limit the recovery in the unfortunate event of a terrorist act.
Now, as a nation, we are moving towards energy dominance, and TRIA is vital to both our national energy security and economic resilience. TRIA's role in stabilizing the insurance market gives energy companies the confidence to invest in long-term infrastructure and workforce development. Thankfully, the Treasury has never designated an event that would activate TRIA provisions, and I hope, quite frankly, that it never does. How can we continue to ensure the program is properly prepared for the future, and are there any potential changes to the program the witnesses would like to briefly discuss?
The first thing, by the way, Congresswoman, I applaud your comments earlier in your testimony. I mean, one thing that I would like to point out is that insurance companies aren't motivated by profit. What we're motivated by is providing coverage for our policyholders and being there after a loss, which means that it's very important that the industry remain solvent and be able to cover those losses. So with regard to the current program, what we found is that it works. And I think what's most important is that we renew it swiftly for a long term, so that the program is there to keep the market stabilized.
Thank you. And in regards to my earlier comments, one of the things that I like about the insurance industry is that is based on facts and not feelings. With that, I yield back.
Gentlewoman yields back. The gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you, Chairman Flood and Ranking Member Cleaver, for this hearing today. And thank you to all of our witnesses, because this is a conversation that I really want to understand better and make sure that my district understands. I represent Georgia's 5th Congressional District, a region with a very vibrant business community, and is centered in Atlanta, where we have a lot of large-scale national security events. And while we can't predict when and where a terrorist attack could happen on our American soil, we know that sometimes big events are a draw, and so that brings a lot of things to mind for me. The city of Atlanta is preparing to host the World Cup next year, and it's a stark reminder of what happened almost 30 years ago when the Centennial Olympic Park bombing happened during the 1996 Olympics. Now, this was pre-TRIA being implemented, so that wasn't something that businesses and the community of Atlanta had access to, which is why this is so important to me. Terrorism risk insurance, or TRIA, is such an important program, and quite frankly, a program that no matter what side of the aisle you're on, as you've heard today, we all agree that this is a program that should exist, and this coverage is very important. Mr. Webel, I'd imagine that most people perceive TRIA being a regional issue for big cities. New York, we heard about the Boston Marathon. Atlanta, in my mind, is like up there on that list. But also, I heard our chairman when he talked about college football. And Mr. Timmons, you know, this weekend when Georgia Tech beat Clemson in Atlanta, there were a lot of people in the city of Atlanta, and so I'm thinking about Atlanta hosting these large-scale national security events. According to Treasury's 2024 data call, take-up rates for terrorism risk insurance are relatively high across the country by policy count. Can you explain why TRIA is important in different regions of the country?
I mean, I think the large-scale events that you mentioned are a big deal. I think also the critical infrastructure that your colleague mentioned is a big deal as well. The truth of the matter is things can happen in wide swaths of the country that can cause a lot of economic damage and a lot of spillover effects in the transportation system, in gatherings, et cetera. And so it really is a situation where that terrorism coverage, you know, it can have a big effect outside of the larger metropolitan areas.
So I'm also thinking about representing a city that has already been impacted by an act of terrorism. It's a constant reminder of why this is important. I also represent the world's busiest and most efficient airport at Hartsfield-Jackson International. And I remember a cybersecurity attack that grounded flights, and that has an impact worldwide. And then I'm thinking about just the ransom that the city of Atlanta had to pay, and that is not covered by TRIA, and we were trying to figure it all out. It left so many constituents unable to pay their water and utility bills on time. Our airport was grounded, and while I know TRIA doesn't speak directly to cyber insurance, Treasury has provided guidance to clarify that cyber insurance is included when it is a written line of insurance that is subject to the program. Commissioner Mays, do you believe anything further needs to be done to clarify or expand TRIA's coverage of cyber insurance? And as an insurance regulator, do you believe the industry has the tools to provide sufficient and affordable coverage for current-day cyber risk?
I do understand the desire to have cyber insurance as a separate line, but I think what we've seen is that that market has expanded. If we look at the number of policies, it's increased 11.7% from 2022 to 2023. We've got $16.66 billion in written premium in the private market. TRIA exists to ensure that to fill in where the private market cannot. If the private market is evolving and providing coverage, I am worried about unintended consequences if we intervene.
Thank you. And I'm going to be running out of time soon, but Ms. Heck, given that TRIA has been extended 4 times since its inception, what are the benefits of having a longer reauthorization, say 10 years or more, so that our communities can have the stability and consistency for their economic development? I'm thinking down the road of big events that we're already planning for in Atlanta, and just everything that we're hearing in this day and age, giving a peace of mind to our communities.
So first of all, again, we've proven, the program has proven that it works. It's been 24 years and the market has really stabilized by the program. So the longer that we can extend it, the more stability that we will introduce into the market. And I think just some other things to remember.
Gentlewoman's time has expired.
Thank you, Mr. Chairman.
The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Webel, I'm going to be directing my questions to you. So let's go back to 9/11, terrorist attack from Afghanistan, and we spent hundreds of millions, billions of dollars making victims whole, and we spent $2.3 trillion in Afghanistan. That was our response to a kinetic attack using airplanes to crash into multiple targets. I want to talk about cybersecurity. So we have nation-state cybersecurity attacks that attack our businesses here in the U.S. on a regular basis. And the federal government doesn't really make whole the victims or the business. And we obviously expect these businesses to have cyber insurance. And I don't understand the difference between a kinetic attack that costs hundreds of millions, billions of dollars in damage from a foreign nation state versus a cybersecurity attack that costs hundreds of millions of dollars, billions of dollars to a business and to victims. Should we view these things similarly, and should we create legislation to make victims and businesses whole from nation-state attacks?
I mean, I will leave up to Congress. But I do think it's a very valid question in terms of, how much does the source of an attack or the source of the damage matter? The nation-state actor is an interesting question because then you start getting into acts of war and war exclusions. And I mean, I do recall seeing some serious analyses post 9/11 that maybe you could have tried to exclude those under a war exclusion on some policies, but that I think for partly public relations reasons, insurers decided they didn't want to go down that road because it would have been a public relations disaster if they had. But these are questions that I think definitely need to be fleshed out in the world that we're in, because the attribution of cyber attacks may be very murky, and it may be very hard to certify a terrorist attack under TRIA because you're not really sure where this is coming from.
How can a insurance or reinsurance company appropriately underwrite an attack from China, Iran, Russia, North Korea? I mean, the resource disparity between a company that is spending hundreds of millions, billions of dollars to protect their data and protect their customers' data versus the Chinese government is just a non-starter. So how can you actually effectively underwrite that?
Well, and I think that's a lot of the reason why, from the insurer perspective, they tend to exclude nation-state attacks as acts of war and want to say, no, we're not going to cover that if it's a nation-state actor. For the individual companies, I think that there obviously needs to be U.S. government involvement in helping people in cybersecurity and understanding things. But in some ways a lot of it comes down to hardening your cyber defenses, whether it's a nation-state attack or whether it's a ransomware from a criminal gang that just wants to extort money.
So our commander-in-chief, his favorite word is tariffs. And my question is this: should the U.S. use tariffs to penalize nation-state attacks to then make the victims and the businesses whole, and just create the status quo of, if you're going to engage in cyber attacks, or I'll go one further, if you allow a criminal organization to operate undeterred within your sovereign borders, I mean, we could do the same thing to a foreign country that is allowing a criminal organization to operate within their borders. Again, whatever the damages are to the business and to the victims, you make them whole. You then levy tariffs against the nation state that is either responsible directly or is harboring the criminals indirectly. And then you say, all right, this is the new status quo. Continue to attack U.S. businesses and you will be penalized financially. Is that a reasonable approach to this problem?
I mean, honestly, it's not an approach that I've ever really analyzed or thought about. I mean, I think that how you approach this is probably a policy question above my pay grade.
Would anybody else on the panel like to address that question about the proposal to levy tariffs to deter nation-state and nation-states that are allowing criminal organizations to operate within their borders as a deterrent method? Anybody? Ms. Heck?
You know, I couldn't opine on tariffs per se, but one thing I would like to say about cyber is that within the TRIA program, again, if an event is certified by the Treasury Secretary, then it would be covered under the TRIA program. So when you distinguish between non-terror events, I would urge Congress to think about, is it can you model it? Is there a private market? And Commissioner May, mentioned that there is a growing market. So
I'm out of time. I'm going to have to yield back. Thank you so much.
Okay.
Gentleman yields back. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. As a New Yorker who came of age amid 9/11, terrorism is no abstraction to me. 24 years after 9/11, the specter of terrorism continues to haunt America's largest city, which in 2025 alone has seen an average of 1 terror plot per month. Terror threats have grown dramatically in the decades since 9/11, and those threats show no signs of subsiding. In the age of emerging technologies like cyber and AI, the complexity of terrorism is rising rapidly in real time. I want to follow up on a number of the questions asked. I have a question about the applicability of TRIA to cyber terrorism. What exactly is the difference between a cyber attack and cyber terrorism, or cyber war and cyber terrorism, or cyber crime and cyber terrorism? Because these lines can easily get blurred.
If I may, so if we look at the statute, what it really focuses on is the intention of the actor. That is the starting point. The intent of the actor, the individuals behind the attack, is to influence the people or the policy of the United States. In the context of cyber attacks, it's extremely difficult to figure out who's behind them and the motivation. That's one of the challenges with certifying a cyber act as an act of terrorism under the existing structure.
What if it were a cyber attack on the part of a foreign government that's hostile to the United States? Would that qualify as a cyber terrorist event?
So the statute does include damage to infrastructure, which was always understood to mean electronic infrastructure. But remember, the decision to certify is a political decision, not a legal decision. The Secretary of Treasury has the sole discretion to certify, and it's unreviewable by the courts. So really, an act of terrorism is whatever the Secretary of Treasury says.
I have a question about the scope of the Treasury Secretary's authority, right? Is it just right, or is it excessive, and should judicial review be permitted or prohibited?
It's a desire to have finality and quickness. So the idea was a single person would make that decision, but we have seen that that can take a lot of time.
Yeah.
My own belief is you could make changes and get to a really bad decision quickly.
Because it sounds like, apart from the 5 million loss threshold, terrorism is whatever the Treasury Secretary says it is. You know, Justice Potter Stewart once said, I can't define it, but I know it when I see it, and that seems to be the standard we apply to the meaning of terrorism for the purpose of TRIA.
My belief is a practical matter, that's true.
And is that excessive discretion, or should there be some judicial review?
A judicial review would create enormous uncertainty that is not tolerable.
As regarding the necessity of TRIA, is it fair to say, and I'll direct the question to Ms. Heck, that without TRIA, there would be no financing or far less financing of projects? Without TRIA, there would be no operational terrorism risk insurance market. And without TRIA, few businesses in America could survive a catastrophic terrorist event.
That's absolutely correct, and we've had 24 years of experience to see what happens when there is a backstop. And we've seen it happen twice, once after 9/11, and then again in 2014 when the program was allowed to elapse.
Right. Yeah, I just find it strange that we're debating the viability of a private market without TRIA as if we have no life experience. Like, what was 9/11's immediate impact on financing and terrorism insurance?
What happened was, overnight, a new catastrophic exposure just emerged, and insurance companies had to really pare back. Otherwise, they risked insolvency. So, you know, the TRIA program really stepped in and made it possible to be able for the economy to continue.
One of the most common complaints I've heard about insurance has been inflation. It feels to me inflation has been particularly pronounced in the insurance market. Have those same inflationary pressures affected terrorism risk coverage? What's been the impact of inflation on terrorism risk coverage?
Actually, the way the program was designed, it's actually somewhat embedded in the coverage. So in what the insurance market, the private market accepts. The underlying deductibles are based on premiums that are essentially indexed for inflation because they grow over time. In general, those...
Because it's a percentage.
Now, the percentage has grown, which means that the private market has picked up additional exposure, but it's also grown just because the underlying premiums have grown. So, for example, my company, our deductible immediately after 9/11 under the program was $10 million, and today it's $250 million. So it's grown significantly.
Thank you.
Gentleman's time is expired.
Thank you.
Gentleman yields back. The gentleman from New York, Mr. Garbarino, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman, and thank you for all the witnesses for being here today. TRIA is a program created following the horrific attacks on 9/11, an event that deeply and personally affected all of us. As a result of this attack, insurers and reinsurers began to recognize real yet difficult to model risk that resulted from terrorism insurance. Terrorism insurance was becoming less accessible, increasingly unaffordable, especially in dense urban areas like New York. Ms. Heck, as a large writer of commercial real estate in New York City, your company was intimately involved in the creation of the TRIA program. Can you help this committee recall the circumstances post 9/11? I know you touched on it a little bit, but post 9/11 that led to TRIA and how the program was designed to help.
Yeah, the program, so immediately after 9/11, development stopped, and what the program did is made it possible for there to be a viable market. And the program does that really in 3 ways. It provides certainty to insurance companies so that insurance companies can manage that exposure. It allows for a robust market by making it possible for small, mid-sized, and large companies to participate. And taxpayers are really fully protected under the program. So when you think about it, all of the stakeholders, it manages all of the concerns of every stakeholder.
While TRIA is not supposed to expire until the end of 2027, I'm glad we're doing this today, and we're now looking at reauth. Ms. Heck, you highlighted in your written testimony that TRIA needs to be extended next year in 2026. Can you please explain what happens if Congress doesn't extend the program by the end of next year? What would happen to insurance contracts in 2027?
Yeah, because the way that insurance contracts are written, because of the timing, it's important to get this reauthorized before we get into 2027. Or what will happen is if policies lapse the expiration of the program, then there will be exclusions attached to it, and we risk running, having that same disruption that we saw in 2014.
Say that again, if it does lapse, what will happen?
If it lapses without a reauthorization, exclusions will be attached to the policies so that we run the risk of having the same problem that we had in 2014 when the program was allowed to lapse.
And I hope it doesn't lapse. I'm sure the chairman and other members of the House hope it doesn't last. Unfortunately, a lot of other things have lapsed because of our colleagues over in the Senate, specifically one of them. I won't mention his name, but hopefully that does not happen here. As chairman of the House Homeland Security Committee, and I'm going to ask you about cyber, just like Mr. Torres did, I held a hearing last July about the importance of securing operational technology systems from cyber adversaries. This includes water treatment facilities, energy grids, and transportation systems, just to name a few. If a cyber terrorism event caused physical damage to these critical infrastructure systems under the TRIA framework, would those attacks be covered?
A cyber attack that is deemed a terrorist event would be covered under the program.
Great. And that is, as we heard the previous member asked, that's if it's deemed a terrorism event by the Treasury Secretary?
By the Treasury Secretary.
There have been people that have come to me and talk about, the creation of a cyber backstop, federal backstop for cyber attacks. Some have suggested tying it to TRIA. I do not think that's the right way to go. If we're going to do something, I think it should be done separately, and something this committee should look at if it should be done separately. So I think it was very important to put on the record that, as TRIA is currently written, it does currently cover cyber terrorism events. I have about 45 seconds left. A lot of times when we reauthorize something, we just reauthorize the law from 10 years prior without any updates. And you might have said something already, but are there any updates that you would like to see put into this that would help the law run better, Mr. Schupp?
Yeah, I do believe that Congress could increase the data collection abilities of Treasury to reach in particular to some of the more opaque structures, such as captives and alien insurers, where data from the NAIC is very limited.
I appreciate that, and I'm down to 10 seconds. So if any of you else have any ideas, if you could submit them in writing, that would be great. But thank you, Mr. Chairman. I yield back.
Gentleman yields back. I now ask unanimous consent to enter the following statements into the record. A September 15, 2025 statement from the Coalition to Ensure Against Terrorism. A September 17, 2025 statement from the American Property Casualty Association. And a September 17, 2025 statement from the Reinsurance Association of America. Those will be entered without objection. I'd like to thank all of our witnesses for your testimony today. Without objection, all members will have 5 legislative days to submit additional written questions for the witnesses to the chair. The questions will be forwarded to the witnesses for their response. Witnesses, please respond no later than October 22, 2025. This hearing is now adjourned.